In San Francisco, and this is Bloomberg Technology. Coming up in the next hour, another high-profile departure from Facebook. What does this mean for CEO Mark Zuckerberg's control of the company? Plus, Saudi Arabia's future investment initiative loses more top speakers over the death of journalist Jamal Khashoggi. Why SoftBank COO Marcelo Claure said no thanks. And Netflix's spending spree continues. The streaming giant turns to junk bonds to fuel its ballooning content costs. How investors are handling the new $2 billion in debt. But first, to our top story, Oculus co-founder Brendan Iribe is leaving Facebook. Iribe was CEO of Oculus VR when Facebook bought the company back in 2014, but was later reassigned. He is the latest in a string of high-profile departures from Facebook this year, including Instagram founders Kevin Systrom and Mike Krieger, as well as WhatsApp founders Jan Koum, along with Brian Acton last year. Joining us to discuss, Techonomy founder and Bloomberg contributing editor David Kirkpatrick in New York, and with him, Bloomberg tech reporter Sarah Fryer, who helped break this story. So, Sarah, what do we know about Iribe's reasons for leaving, and do they differ from that of the other founders?
Well, it's sort of, you're seeing this trend right now, right? All these companies were convinced to join Facebook in part because Facebook said that they could remain a little bit independent, sort of like the same independent company they always were, but within Facebook, with all of these resources to grow faster. It looks like that kind of promise is eroding a bit. Iribe said that he needs time off because he's been in the game for 20 years and he needs a break. Whether that's the real reason, I'm sure we'll find out soon, but it's just a part of this larger trend of Facebook taking a little bit more control over the future of Facebook, which is, as we have spoken about on the show, the future of Facebook is going to be more diversified than Facebook itself and the newsfeed. It's going to be dependent on these other properties to bring money in that's more diversified, and certainly VR is one of those longest term bets.
Now, Iribe's departure is certainly not surprising. I mean, you've reported, Sarah, on tension between the Oculus founders and Facebook that goes way back. But him leaving in the context of all of these other founders leaving. David, Sarah and I heard Kevin Systrom speak at the Wired conference last week, and he was very diplomatic. He didn't sell Mark Zuckerberg down the river. But the way in which these departures have happened does not look good. How bad is this, David, for Facebook?
Well, there's no question it does not look good, but you got to remember, all these people got a gigantic payday quite some time ago, and, you know, they are now in a company that they have to justify to all their friends why they're staying with. I mean, that's the reality of working at Facebook today. Facebook is increasingly perceived as a negative in society among the sort of sophisticated circles that these kind of people circulate in. And also, if you don't really have much power to do anything about the significant central problems that the company is facing, you're working in a more peripheral part of it like Oculus or even WhatsApp, which is not very far off the center, I acknowledge. But, you know, you might just feel you just don't have the power to do anything about it. Mark Zuckerberg doesn't listen to you. Therefore, just clear out. Plus, yes, of course they're tired.
Is that the case, though, Sarah? Because, you know, we had that rebuttal from Facebook's David Marcus, who said that Mark Zuckerberg goes to extraordinary lengths to protect founders. What are you hearing?
Well, I think he does protect founders as long as they're performing to his expectations. And I think in the case of Oculus, you know, Facebook was a little disappointed about how fast that was moving. A couple years ago, Brendan Iribe stepped down from his job as CEO to leave room for Hugo Barra, the Xiaomi executive, to come take over the whole VR initiative. And so Barra has really been driving that. And in the couple years that he's been in charge, they've released a few new devices that bring VR into a more mass market realm. There was the Oculus Quest and the cheaper one that came out earlier this year that people can buy for their homes. I mean, this is something that the part of it that Brendan was working on, this sort of high quality PC tethered Oculus, will be a little bit more of a narrow market if you think about Zuckerberg's vision of eventually getting 1 billion people using virtual reality.
David, you just published a post on techonomy.com where the first line is, never before has one company's failure had such a devastating impact on the world. That is a devastating opening line, if you will. This is a company that is now working on its election response in multiple countries, not with just the U.S. midterms coming up, but also elections happening in Brazil. What do you mean by that?
Well, it's not the only very strongly negative line in that story, sadly, which is called Facing Facebook's Failure. I really was, unfortunately, I felt forced as someone who's been covering this company closely for 12 years. I wrote a book called The Facebook Effect about it, which was a generally positive portrayal. And I still believe the company has enormous positive potential and does a lot of good in the world. But it is doing some enormously negative things in the world that I don't think the company is acknowledging or fully reckoning with, and has actually, to some extent, sought to suppress and cover up. And the story actually documents specific cases where they have dissembled, where they have refused to react after being presented with unequivocal evidence, particularly in cases like genocide in Sri Lanka and Myanmar, all kinds of hate speech incidents that they've done a very poor job responding to, and never really taken a systemic look at their system and asked, why is this happening? And my fundamental critique in the article is that they prioritize growth over governance. And we now have a global system which empowers anyone, including the most evil, dishonest people, whether they're political leaders or criminals or whomever, and it does not have governance or real tools to allow the malfeasance that takes place on this system to be regulated and contained. And that is causing enormous difficulty in the world. And it worries me tremendously.
Walk us through what's happening in Brazil right now, days away from a presidential runoff election where WhatsApp has been overrun by fake news and conspiracy theories, and you have a candidate who didn't have a lot of public campaign funding, managed to somehow run an incredibly successful campaign exploiting social media.
Well, Facebook would like you to think just of the good that the platform has allowed to proliferate, but there's also the same tool can be used for viral misinformation and spam and the kind of activity that's gone on WhatsApp. And Facebook was able to take down a lot of spam accounts on Friday, and that was like their response to the fact that there was just this proliferation of misinformation that's in some cases led to violence around Brazil's first vote. There'll be a follow-up vote on October 28th. But this is messy, and as many of Facebook's problems are, because you have, it's not just random bad actors in the community stirring up drama. It's not even a foreign actor. It's people from within Bolsonaro's campaign. His son was kicked off of WhatsApp and then later restored. And Facebook's dealing with that at the same time as it's trying to roll out this war room where it's trying to convince the public that it will be prepared for the not just the Brazil runoff election, but the U.S. midterms coming up very soon. And the problem in Brazil in particular is that WhatsApp is an encrypted app. So the messages that people send to each other, Facebook can't really see. They're using their machine learning, AI training, some of the signals they're getting from Facebook to try to figure out where the spam is and where it's coming from. And then all they can do is get rid of the account. They can't necessarily track what's being sent to who or how often it's being sent. And that is a very hard problem to solve.
David, Sarah and I both went into this election interference war room that Facebook has now set up, where they have teams of people from different teams across the company who can make quick decisions if something happens. They're tracking the elections in Brazil. They're tracking the elections in the United States. The point has been made that Facebook can't do everything. At a certain point, it's going to be up to users to decide if they see a post, whether it looks false or not. Is it too much to expect Facebook to be able to do what apparently what we're expecting Facebook to do? Well,
certainly I think no intelligent observer could expect them to keep all unpleasant and unproductive messages off their system. What we need is far better means to address the problems when they are identified. I think the war room is a great idea. It should have really been begun probably 4 years ago. But you look at a situation like what happened in Brazil with Bolsonaro, his son getting kicked off WhatsApp, or in Myanmar, where the general who runs the country got kicked off Facebook, but they only kicked him off after the UN recommended that he be prosecuted by the International Criminal Court. That's how much of a signal they required. They actually had plenty of information, if they chose to look at it, to know that the generals who run Myanmar were encouraging a genocide against the Rohingya Muslim minority. So the problem is, this is a country that's in 133 languages in 190 countries, and the goal they had was to get there. And now they're there, and they don't really know what to do to prevent it from having dramatically negative political consequences. And part of the problem is there are a certain kind of politicians that are popping up in Turkey, in Hungary, in Myanmar, in plenty of places where they're, Brazil, in Italy, where they don't really want to follow the rules. They want power at all costs, and they will do whatever they have to do. And Facebook is a system that is easy to cheat inside, and Facebook does not yet have the tools to prevent that cheating. It's something that we at Techonomy have made such a priority. We have a session at our conference in 3 weeks with two of the sources in this story, including Sanjana Hatatua, who's a Sri Lankan human rights activist who tells the most shocking stories in that article that I published today. It is shocking how much Facebook has allowed to happen. It is unacceptable. They can't solve everything. They can't ever be perfect, but it's disastrous.
Sarah, the other thing that's fascinating is simply the size of WhatsApp in Brazil rivals the size of Facebook. I mean, does that happen anywhere else?
It's very common in countries outside the US for WhatsApp to be so much more popular than Facebook. And so that's one of the problems here. When Facebook comes out and says, we are going to solve this problem, we are administering our machine learning algorithms, we're checking what's trending, we're figuring out who's saying what, and we're figuring out if there are any fake accounts and bots and pages, and we'll purge them. That stuff doesn't necessarily apply to the main tool that people are using in many of these countries.
All right, Bloomberg Tech's Sarah Friar, Techonomy founder, and our Bloomberg contributor, David Kirkpatrick. Lots to debate and discuss days away before these elections in Brazil, and then, of course, the United States. Coming up, tech stocks attempting to bounce back after a miserable few weeks. Could earnings from Amazon, Alphabet, and Microsoft this week give them a boost? We will discuss. This is Bloomberg. With tech stocks suffering their worst month relative to the broader market in more than a year, Goldman Sachs has some advice for bears. Make sure you're selling for the right reasons. According to Goldman, popularity has turned into concerns of overcrowding, and outperformance has turned into concerns of overvaluation. Strategist David Kostin says he believes that these risks are overstated. Equities are attempting to bounce back after a miserable few weeks, and company results from the likes of Amazon, Alphabet, Microsoft, and Intel may provide a welcome stimulus in coming days. Joining us to discuss, Michael Purvis, Wheaton & Co.'s chief global strategist. Also with us, Bloomberg's cross-asset reporter Sarah Ponsack. So, Michael, I'll start with you. Is the sell-off overblown?
I think so. I think I'm on David Kostin's page here. I think, look, you know, if you look at the ratio of, say, the NDX to the SPX or the XLK to the XLF, you see these periods where it really is underperforming. And of course, we have a broader discussion layered on top of that of, you know, how late cycle are we? What is the 210 curve spike and the 10-year yield spike, you know, sort of telling us on the broader macro theme here. But I think what's been happening here is that, you know, the buy side has been playing it safe since Q2, particularly with the stuff that has run a lot. But that safety also helps ensure further, you know, a higher probability of a rally coming out of earnings here. Obviously, earnings do have to perform here. From a top-down perspective, I don't see many reasons why they shouldn't be reasonably strong. And I'd make the further comment here that of all the sectors that we talk about in this late cycle discussion, you know, if you think about unemployment pressures, well, sure, Amazon just raised its minimum wage here, but broadly speaking, for the tech mega cap companies, they're largely less vulnerable to a lot of these late cycle risks and pressures that the market narrative seems to have been focusing on lately. You know, programming costs are not really part of that U3 discussion that the Fed and others and economists are so focused on. It's a different discussion, and I think that's going to be another reason reason why they're going to get bid here if we do find good earnings.
Sarah, walk us through the underlying reason that investors are selling.
So there's been a lot of reasons out there that investors have been blaming for the sell-off in tech. So whether that be the run-up in rates that we saw, or that some tech companies are more exposed to trade with China, as well as the fact that maybe this was just a momentum trade that had to get unwound. And what we also heard from David Kostin saying that valuations maybe got a bit ahead of themselves and that this was just a crowded trade. However, as David Kostin did say and point out, he said that if you look at computer and software companies, they have actually been cheaper than they've been historically. And at the same time, if you look at holdings of mutual funds, they actually right now hold less tech than the average benchmark index. So in fact, that idea of them being very overcrowded or extremely expensive just might not be the case for certain investors.
Now, Michael, you know, did this start earlier this year with Facebook, with Cambridge Analytica, with that big bad earnings report where they had, $20 billion wiped off their market cap?
Well, it's interesting you brought that up, because I think one of the other reasons why I feel a little bit more comfortable about being overweight or long this sector is that since the Facebook scandal with Cambridge, really erupted last spring, what you've seen here is a pretty much persistent bid for NDX volatility there, which means that people have been buying the dip, but they've been buying the dip with some insurance or some protection there, and that should help insulate a downside risk if some of these whether it's a big earnings miss or maybe the prospect of a tail risk of government intervention starts coming more into the foreground here. I think that latter situation is a little bit more hypothetical than real right now, but obviously something you need to be wary of, particularly given how skewed the sell-side analysts are on the FANG stocks and so many of the tech names where there's a lot of buys, not a lot of sells.
Facebook actually had some 20% wiped off its market cap, which was closer to $100 billion. Sarah, is this kind of volatility here to stay, knowing that we have earnings coming up this week?
Well, I think there's no question that this week is going to be a huge week for the market as a whole and for a lot of these big cap tech names, just because we have some of those huge ones reporting. Now, I think they are expected largely to come out strong. However, if we get any misses or if we hear management caution at all, we've seen in the earnings season so far that almost any news is bad news. If you miss on one number, or if the executives do come out talking about price pressures or trade, then that could hit the stock. However, those aren't really issues that should be expected with some of these big tech companies. But if you look at VXN, which Michael was just discussing, the volatility index on the NASDAQ 100, it's risen the past 3 weeks, whereas it kind of came off a bit for the VIX last week. So we continue to see volatility in these large tech names.
So, Michael, what's your advice to investors right now, knowing that Netflix actually reported a strong quarter? This was on the back of a not so strong quarter, and that there are a few days left before we actually have this new information.
Look, I think if you have a generally positive view on risk appetite and the broader equity market, you really need to be long tech and FANG and growth stocks. Every time we get a 210 curve spike here, you see this narrative about rotation into value, but I'm not sure you necessarily whether that argument is going to hold up this time, but it didn't hold up the last several times that happened. So I would stay with what has been working. I think it's going to continue to work. A lot of these big cap stocks are just not burdened by a lot of the late cycle vulnerabilities. The quality of their earnings growth, if volatility adjusted earnings growth over the last 5 years for these stocks has been far superior to what we've seen in other equity indices. And I don't see reasons why that superiority won't persist, at least for the next 6 to 12 months.
Now, Sarah, the point has been made that tech is relatively cheaper to what it once was, but is that a good benchmark?
I think it depends what you're looking at. What's interesting is you can almost find a valuation for everything. Some people are looking at price to earnings, some people are looking at price to book, price to sales, and people will kind of pull on what they really feed off of. So yes, relatively cheap compared to history, yeah, that would be a good benchmark to go off of, but it really depends on how you are actually evaluating the prices of these companies. And also you have to take into account their forward growth and their forward price. So you have to take all this into account when trying to figure out if this is time you really want to step in and buy.
All right, Bloomberg, Sarah Ponsek, Michael Purvis of Wheaton. We will, of course, be across all of these earnings over the next couple of weeks. Well, Tiger Global has reportedly raised $3.75 billion for its 11th venture capital firm. The new fund, Private Investment Partners 11, is set to specialize in technology with investments in consumer internet, cloud software, as well as direct consumer firms in the U.S., India, and China. Sources say the fundraising exceeded the firm's target of $3 billion, bringing Tiger's total venture capital assets under management to more than $15 billion. Coming up, the Hyperloop may become a reality sooner than you think. Where and when the high-speed transportation will begin testing. Next. And Bloomberg Tech is live streaming on Twitter. Check us out at Technology, and be sure to follow our Global Breaking News Network TikTok on Twitter. This is Bloomberg. More upheaval at CBS. Richard Parsons has resigned less than a month after being named interim chair. He was one of 6 new board members appointed at the network after the departure of chairman and CEO Les Moonves, who was accused of sexual harassment. Parsons says he's leaving because of complications from blood cancer. One of the new board appointees, Strauss Zelnick, was named the new interim chair. Zelnick is, of course, the CEO of Take-Two Interactive, publisher of popular video games like Grand Theft Auto. Meantime, shares of Royal Philips have fallen the most in more than 7 years. The Dutch health tech company posted third-quarter profit that missed estimates, while Philips says it wants to redesign its manufacturing output because of trade tensions.
First of all, we will redesign some of our supply chains. I mean, we are in the good position to have factories in the United States, in Europe, and in Asia, and we can rebalance load going forward in order to avoid some of the duty impact. Besides that, I think we will have to look at raising prices selectively, as well as taking further productivity measures to offset, for example, these currency headwinds.
Elon Musk has taken a step forward in his vision for the future of public transportation. He announced that his Boring Company's Hyperloop test tunnel will open in less than 2 months. The tunnel begins on the site of Musk's rocket company in the LA area, but it is unclear what sort of transport Musk will use to achieve top speeds of 760 miles an hour. Coming up, saying no to Saudi Arabia. Another big name leaves their investment conference. Now the COO of SoftBank is walking away. That is next. Plus, Netflix just took on more debt to fund its appetite for new content. Should investors be concerned? This is Bloomberg. This is Bloomberg Technology. I'm Emily Chang in San Francisco. More big names dropping out of the upcoming Saudi Arabia investment conference, and this time it's SoftBank COO Marcelo Claure. This according to sources. Claure's withdrawal comes in the wake of Saudi Arabia admitting that journalist Jamal Khashoggi was killed in its embassy from an alleged fistfight. Joining Claure and dropping out, ARM CEO Simon Segars, the two of them now part of a list of no-shows that includes Richard Branson, Jamie Dimon, Steve Mnuchin, and more. The case has even prompted a rare on-camera response from another member of the Trump administration who has a personal relationship with Saudi Crown Prince Mohammed bin Salman. Take a listen to what President Trump's son-in-law, Jared Kushner, who rarely speaks to the media, told CNN.
To be fully transparent, the world is watching. This is a very, very serious accusation and a very serious situation, and to make sure you're transparent and to take this very seriously.
To discuss, we are joined now by Bloomberg Executive Editor for the Middle East and Africa, Riyad Hamada. He joins us from Riyadh. And here in the studio, we've got Bloomberg Tech Selena Wang, who covers SoftBank. So, Riyadh, I want to start with you. And Jared Kushner did leave the door open there because he said they were still working to gather the facts from a lot of different places. But talk to us about Marcelo Claure declining to attend, along with Simon Segars, which is a company that SoftBank bought, in the context context of the new information we're getting about a body double being sent in and more signs of alleged premeditated murder.
These leaks that are coming out, I mean, the issue is that there has been this sort of drip of leaks being provided by the Turks to various media outlets. And I think every time the Saudis come up with an explanation or a version of events, the Turks seem to be leaking yet more information to raise doubt about that, adding to pressure on Saudi Arabia. And I think that's basically making it very hard for senior officials of companies, senior executives, to agree to be at this conference, because they feel that right now it may taint them or may raise questions against them about their relationship with the leadership in Saudi Arabia. So you're seeing people really at the last moment, I mean, the conference is about to start, dropping out.
And Selena, we still don't know yet if Masayoshi Son himself will be attending this conference, correct? But the COO not going is a telling sign.
It's certainly interesting because Masa Son has not made a public statement about whether or not he's attending. He's actually also on the advisory board, and this is starting any minute now, and he's probably imminently preparing whether or not to attend. And I have heard from sources that some of the portfolio companies still slated to speak are still on the tip of their chairs deciding whether or not they should go. It is interesting that Marcelo has decided to take his name off of the list. We're seeing a sort of potentially an internal split about what they should do about this. But again, Masa Son is in a super precarious position right now because he has a very close and personal relationship to the Crown Prince. The Crown Prince has personally committed, $45 billion to the current Vision Fund, another $45 billion to the next one. And he certainly probably wants to maintain that relationship and wants to continue to wait to see what the official statement is from the Saudi government, even though it's looking increasingly bleak and horrifying.
Riyadh, you've seen an entire evolution here. I mean, the point has been made that the discussion about the ethics of doing business with the Saudis should have happened a long time ago, and yet now we're seeing so many different companies, so many different people tied up in business relationships with the Saudi government. Do you believe that these relationships are at risk of completely unraveling at this point, or can they be saved?
I think it's hard to see them completely unraveling because the investments, the linkages, as you said, are really so significant. I mean, if you think of SoftBank, just SoftBank alone, we're talking about $90 billion, $45 billion already committed, another $45 billion promised, plus the agreement, for example, for this 200 gigawatt solar park, which was signed personally by the Prince and Masayoshi Son. It's kind of hard to see that suddenly disappearing. You look at the $20 billion infrastructure fund that the Saudis have invested in the US. You're looking at all the big Wall Street players having great commitment, having placed a lot of, are really invested in Saudi Arabia and are trying to do work with Saudi Arabia. So seeing that unravel completely is hard to imagine. However, I think what you will see is that the willingness of fresh money to come in, the risk premium, at least the risk premium asked of the Saudis may rise.
Well, and I wonder, Selena, what happens to that, because it's been said that it'll be really difficult for SoftBank to find an investor who's willing to commit as much money as the Saudis have committed to not just this Vision Fund, but successive Vision Funds. And I wonder if, companies like Apple and Qualcomm have also invested in the Vision Fund. And if they don't reject that money, does that compromise the investors who've already come on board?
It's going to be certainly difficult for SoftBank to replace that $45 billion in this fund and another $45 billion in the next fund. And we actually had a recent interview with the Crown Prince by Bloomberg News, and there was a very interesting statement that he made. He said, "We are the creators of the SoftBank Vision Fund. Without the PIF, there will be no SoftBank Vision Fund." So clearly, they're incredibly important to the ability of this fund to exist. Furthermore, Masa Son may have his reputation tainted in Silicon Valley if he continues to take money from the Saudi Arabian government. Silicon Valley has this ethos of doing good, though there has been, quote, quote, dirty money that has come into Silicon Valley in the past with such a public, horrifying incident. It may be hard for some of these entrepreneurs to swallow the fact that, this is where the limited partners for this fund is ultimately coming from.
Now, Riyadh, what is your take on the comments we heard from Jared Kushner? I mean, this is the first time he's done an interview since President Trump took office. And at this particular time, given what we've also heard from the president himself, which is sort of a set of mixed signals.
I think it just shows the difficult position that the Trump administration finds itself here. I mean, you see these contradictory statements from the president, and Jared Kushner is basically taking the Saudi Arabian line on this, which is, let's wait and see what investigation shows. So then they're deciding not to rush to judgment on here. At the same time, he's telling the Saudis, please take this seriously. My sense from being here today, I think the Saudis are taking this quite seriously, and you can see that by the fact that they removed senior officials from their positions, basically getting them to take the blame for all of this. I think that the key here is the role that the Crown Prince played or didn't play in all of this. The Saudis are insisting that he didn't know what was happening. He wasn't told what had happened. And I think the Trump administration would like that to be the case. But they're asking the Saudis to really come clean, as it were, with all the information they have about this.
Riyadh, though, isn't that going to become a little bit more difficult to defend given the leaks coming from the Turkish government? I mean, it seems like every time the Saudis make some statement, new information, new evidence comes to light, undermining what they have said.
Indeed. I think one has to, though, just to say that a lot of the things coming from the Turkish side are indeed that leaks. They're not from they're not official statements by Turkish police. Now, we may hear more that is official from Erdogan tomorrow, which is also the starting day of the conference. So we may know formally what the Turks actually have. We may not, we don't know. Because the Turks, what they are releasing the information. Sometimes they've released pictures. They say they have tapes. We're not sure whether they have tapes, whether it's video or just audio. So there is a little bit of uncertainty of exactly what it is that officially they have. And I think that's causing that bit of unease in people sort of deciding what to do, what not to do. It seems right now that most executives, the top executives have decided it's just not worth the risk, the reputational damage. But let's also say, I mean, the conference will have a lot of sort of mid-level managers coming from these banks. So I think there's clearly a sense that they don't want to cut off ties completely.
And one last quick question. What is the reaction among the Saudi population on the ground there, given, obviously these huge diplomatic relationships at stake, but a huge investment conference that's supposed to be about the future of this country, being seriously compromised?
I think, first of all, it's hard to generalize. Of course, there are no opinion polls or freedom of expression, but just from the people that our reporters have talked to, there is a sense of shock. There was shock when the government finally came out and admitted that Khashoggi had killed the foreign minister, then we even further and called it murder. I think, again, the officials I've talked to here say, yes, something went wrong, something terrible happened. I think the admission of that after really 10 days of denying that Khashoggi had killed and saying that he had left, which the Crown Prince told us in the interview with us, he said that, according to his information, he left the consulate soon after entering it. I think there is a sense of shock at this, and great discomfort at this. People kind of feel what this doesn't represent our country. This isn't something that should have happened in their name, as it were. But at the same time, there's also a sense of that the country is very much under attack.
Fascinating. I know you'll continue to keep us posted as events unfold. Bloomberg's Riyadh Hamad in Saudi Arabia, and Selena Wang here with us in the studio. Thanks so much. Meantime, the website of the Saudi Investment Conference that was set to open this week appears to have been hacked before crashing. The site's homepage displayed an error message Monday after screen grabs taken from the same web address appeared earlier on social media depicting Crown Prince Mohammed bin Salman standing over a slain journalist, Jamal Khashoggi, with a flaming sword. The images also showed an Islamic State flag unfurled in the background. Coming up, Netflix is once again turning to the junk bonds market. Can the streaming giant handle the debt? We'll have more next. This is Bloomberg. Netflix's appetite for new content is not cheap. The streaming giant now plans to raise $2 billion to fund its growing content spending by financing debt securities. The company's move to the junk bond market comes just a week after its third quarter earnings report, where it announced over $8 billion in long-term debt. Can Netflix handle the risk? Joining us now from LA to discuss, Bloomberg's Lucas Shaw. So, Lucas, can Netflix handle the risk?
As long as they keep growing, they can. I mean, Netflix seems to borrow money every 6 to 12 months now because of just how much they're investing in the original programming, which then attracts the customers, which then boosts their subscriber totals, which makes Wall Street happy, and then they use that happiness to go and raise money at decent rates.
So, why do they need to do this? Is this all about the content spend?
Yeah, it's because of how much they spend and the rate at which they spend. You know, Netflix has managed to account in a way that makes it seem like they're spending a little less money than they are. You know, on a profit and on their kind of balance sheet statement, they'll say that they've spent about $7 billion so far this year, and they're going to spend even more by the end. So let's say they account for $9 billion. On a cash basis, they're spending a few $billion more than that, which is why they have to keep raising money. But the way that they kind of claim that they're spending it, a lot of the upfront cash that they have to spend on a show, they can amortize over time and pay for it in a couple years.
So that said, sales are still growing 30 or so % a year. You know, do they actually need to do this, or is this just a strategy?
I think they need to do it if they want to keep increasing. So their whole strategy is to keep increasing, to grab a larger share of the amount of time people spend watching video. So if you're spending an hour a day watching Netflix now, or an hour and a half, they want to make that 2. And their way of doing it is to give you something that you haven't seen before, give you something new. And they're not just doing that for their customers in the US, they're doing it for an increasingly global audience. So if you notice some of the money that, or excuse me, some of the bonds today were in euros, that's probably because a growing share of their audience is from Europe.
Should investors be nervous about the risk of all this debt?
I think you are nervous about them raising more money if you are nervous about the kind of the Netflix model at all. There are still analysts, investors who say that this is unsustainable, that I got an email from somebody last week that Wall Street is stoned on a brand name because they're so excited that there's this company that's kind of sexy and new and has all these shows that people like, and the model isn't secure. But it's hard to imagine Netflix going anywhere at this point. You know, they have so many customers and are growing at such a rate. The question is just, can they keep that going? It becomes a kind of a valuation question. Are they a little bit overvalued? Probably. Is this a company that's disappearing anytime soon? Not at all.
And what about when it comes to competitors? Are they burning through cash at the same rate?
No. Most of the big media companies have, some of them have plenty of leverage, like CBS, for example, has a lot of debt, but most of the big media companies are very profitable, and so they don't need to raise as much money. They're also not increasing their content spend at the same rate that Netflix is. Some of these other companies, like Apple and Amazon, maybe they are because of the rate that they're increasing, but again, Apple's sitting on so much cash that it's not as big a concern for them. Same for Amazon. These are companies that just have much more robust businesses because entertainment is mostly a marketing spend.
All right, Bloomberg's Lucas Shaw for us in LA. Thank you so much for keeping us updated. Meantime, billionaire Richard Branson has stepped down as chairman of Virgin Hyperloop, the company that plans on building a supersonic transport system. Branson says Virgin Hyperloop needs a more hands-on chairman. Last week, the Financial Times reported that Saudi Arabia pulled out of a planned deal with the company after Branson halted investment talks in the wake of the disappearance of Jamal Khashoggi. Coming up next, who wins the global AI race? China? The United States? Someone else? Kai-Fu Lee weighs in. This is Bloomberg. In the race to be the global leader in artificial intelligence, China wants to be in first place by 2030, and it's making its presence known in the AI startup world. Beijing is funding 48% of the global startups in that space. The U.S. is second with 38%, this according to research firm CB Insights. China is also planning to invest at least $7 billion in AI by 2030. So just which country will win this race? We sat down with Kai-Fu Lee, CEO of Sinovation Ventures, who authored a new book on the topic, AI Superpowers, China, Silicon Valley, and the New World Order, to find that out, as well as what people are missing in the conversation about AI.
Well, I think people still have a mistaken assumption that AI is about this human intelligence. And in the book, I try to really clarify a few things. One is that AI is a very simple but very effective way in one domain to do something. Secondly, China is really good at implementing AI, while the US is good at the research and technology. And thirdly, this AI is going to make a huge impact to the world, including creating a lot of value, wealth, implementable in every domain, but also causing some challenges like displacing jobs, for example.
We talk a lot about China versus the U.S. in AI. Is it really a zero-sum game, or are parts of it a zero-sum game?
I think it's not at all a zero-sum game because Chinese VCs invest in Chinese AI companies who build products for Chinese customers, and American VCs invest in American companies who build products for American or developed world customers. The gain of any Chinese company in AI does not come at the expense of any American company. So it's like two parallel universes running. So I think we ought to work together if the climate would allow it.
So should the U.S. be worried about China surpassing this country in AI and vice versa?
Well, in research, China's not going to surpass U.S. for another 20 years with or without any regulations. I mean, U.S. is just so far ahead in research. However, in implementation, China has everything it needs. There's nothing U.S. can do that will slow down China. So it's kind of pointless in AI to look at how to regulate.
How confident are you in the U.S. administration, the current administration, the Trump administration, handle on AI and new technology and the consequences, especially given some of the choices that the White House has made in taking on China?
Well, I think the trade dispute includes a lot of issues outside AI. But I think in the AI issue, I don't see a lot of in-depth understanding. And I saw in the Obama administration, the AI white papers were very thoughtful, well-written, inclusive of a lot of experts. But I don't currently see that in the new administration.
So what are the dangers of that?
Well, I think China is actually quite willing to work with the U.S. I mean, theoretically, if we could invest in a company that has the U.S. research and technology and the China data and market access, that's going to be the fastest growing. It's going to accelerate AI. And I think if the current policies makes that not possible, I think it's at both countries' loss.
If it's not a zero-sum game, then should the U.S. not be worried about China stealing its IP? I mean, because that is in part what the president cites as his concerns.
I think the IP issues is a universal concern. Everyone, including Chinese, now see the errors of some companies. And I think any agreement that protects IP, I think will be welcomed by China. But I think to include everything in this trade deficits is too much.
Do you believe that AI will share our values?
Well, I think at this point, AI is just our tool. We program AI, we train it with data, we tell it what to optimize. So there's no independent thinking by AI to not share our values. However, I acknowledge that, for example, when Facebook programmed their AI to get us to read the newsfeed more often, it has certain side effects. I think those side effects can be studied and controlled. I'm not with some of the more extreme views that AI will reach singularity and be smarter than people.
You don't think that AI will become superhuman?
No. I don't think it will happen for sure, not in the 20, 30 years.
But what if someone
Possibly never.
programs it to have that capability?
Well, we don't know how to program it. It's still missing about 10 breakthroughs. If we look at the last 62 years of history of AI, there has only been one breakthrough. To reach the point of superhuman intelligence, we need at least 20 more breakthroughs. And when we start seeing 5 or 8 breakthroughs, we can revisit the question. But now, no one knows at all how to build it. I think many of the remarks about exaggerated AI impact in the world are made by non-AI people, which is why AI people need to stand up and say, wait a minute, before you make those projections about dystopia, let's see some engineering progress.
So Elon Musk is wrong.
He is.
Our conversation with Sinovation Ventures, Kai-Fu Lee. And that does it for this edition of Bloomberg Technology. From San Francisco, I'm Emily Chang. This is Bloomberg.